tax-free tip: don't rush your financial moves just yet. The recent no tax on tips provision, introduced by President Trump's Big Beautiful Bill, has opened up some exciting financial planning opportunities for certain workers. However, before you start making any major financial decisions, it's crucial to understand the full implications of this new rule. The provision allows workers to deduct up to $25,000 in qualified tips annually from 2025 to 2028. But here's where it gets controversial. Not all occupations are eligible, and the official list of qualifying jobs is still unclear. The U.S. Treasury released a preliminary list of 68 occupations that typically receive tips, but experts caution that this list may not be definitive. Thomas Gordzinski, a licensed tax expert, advises against making any major moves until we have more clarity. And this is the part most people miss. Your job's eligibility depends on whether it's considered a specified service, trade, or business, SSTB. Trump's 2017 legislation outlined a list of SSTBs, which limits eligibility for a 20% deduction for certain businesses. This list includes jobs in healthcare, legal, financial, performing arts, and sports industries. So, if you're a W-2 worker or self-employed, your eligibility for the no tax on tips deduction could vary. Experts emphasize the need for further clarification to understand which occupations qualify and how they interact with the SSTB list. For now, some workers are in a holding pattern with their year-end planning decisions. One potential strategy could be reducing modified adjusted gross income, MAGI, to qualify for the deduction, as the tax break on tips phases out once MAGI exceeds $150,000. Another example is retirement savings. Self-employed workers who make retirement plan contributions may want to consider the potential impact on their net business income and the tips deduction. This deduction is a key metric for sole proprietor clients, Gordzinski says, but we need more guidance to maximize the overall tax break. For workers whose occupations appear on the preliminary list, but aren't on the SSTB list, it's essential to understand the law and its implications. Melanie Lauridsen, Vice President of Tax Policy and Advocacy, advises, get a grasp of what the law says and what it means. While it may be tempting to act now, experts recommend waiting for further details from the Treasury and IRS, which are expected by early October. Until then, it's best to consult with a tax professional or financial advisor to ensure you're making informed decisions. So, what do you think? Are you eager to take advantage of this new tax provision, or do you prefer to wait for more clarity? Share your thoughts in the comments below.